Okay, so I hope everyone is suitably refreshed and nourished after lunch, and good to have you all back here in the room. Welcome back. My name is Rana. I teach China in the world in various forms at the Harvard Kennedy School. It's my great privilege this afternoon to moderate a panel of three immense experts on the Belt and Road and the intriguingly titled Prospects for the BRI. So that could be good, it could be bad, but it will certainly be interesting, I think, in many ways. Let me briefly say something about the panel that we have here today. To start us off, first of all, we're going to have Adele Maria Carrai, who teaches at New York University, both at its Shanghai institution, and also in New York City itself, which, as everyone knows, is the Shanghai of America, as it's usually known. So welcome to this side of the landmass, I would say. Maria is also, amongst other things, the author of Sovereignty in China, published in 2019. So again, very, very qualified for this panel. Following on from her will be Dr. Eyck Freymann. Eyck is currently at the Hoover Institution, but has Harvard time on his billet in quite a number of ways, in fact, having studied here and also spent time as a fellow down at the Belfer Center. He is the author of the indicatively titled One Belt, One Road, published by the Harvard Asia Center in 2021. And if he looks more than usually sort of dream encrusted, so to speak, it's because I think you actually stepped off a plane from Tokyo a few hours ago. Is that right? So I'm glad that you felt the urgency of being here was such that you would make every effort. That is very good to know. And the last but by no means least speaker on my left here is Minye from Boston University, who holds the Pardee chair. Is that right? Yeah, absolutely. In international relations, and is the author of Belt, Road and Beyond. Which is not to be confused with Bath, Bed and Beyond, which was a rather different sort of, although equally worthwhile enterprise. I don't know where the inspiration for the title came from.
They're bankrupt. They went bankrupt.
Yeah, which will not happen to the BRI, obviously, which will go, no doubt, from strength to strength. Anyway, we will not discuss the subject today of loofahs or bubble bath, but we will be talking about the Belt, Road, and indeed what comes beyond and its prospects. And your 2020 book, I think, will be immensely important for that means. So welcome to all of our speakers. We're going to give each of them up to 15 minutes to give a short presentation, and they have very nobly divided up the subjects that they're speaking about into themes. So we will have quite a bit of discussion on that. After the initial presentations, we will then have a little bit of interaction between panel just to follow up on some of the points for a few minutes, and then it's very much open floor to everyone here, and we'll be finishing just after 3 o'clock, so plenty of time for comments, questions and ideas. Really looking forward to that. So could we start our proceedings? Maria, could you take us off first?
So hello everybody, and thank you for for the organizers of this conference. I'm also a proud CWP China and the World program fellow, past fellow. And so today I'm going to talk about the Belt and Road Initiative with a particular focus on Europe. And we will find out that BRI has not gone bankrupt. Not for sure. It has reconfigured itself, but it's still there. And it will continue to be there with us for the next years and decades. And so we hear over and over on media that, especially after COVID, there was this sense that the BRI was kind of dead, and then it was replaced by other initiative that was launched by Xi Jinping, like the Global Security Initiative, Global Development Initiative, Global Civilization Initiative, and so forth. And here are just some headlines, right, that kind of convey this sense of failure, right, where the BRI is going. However, it is going if we look at some of the data. And here on the right side, we have import and export with economies involved in the BRI. And you see that even after the pandemic, there's been actually an increase in trade between China and BRI countries. And then we have this other data from data that shows China development finance directed to the global south, in particular to the developing world. And we saw, like in 2020, a decrease during the pandemic, but we see how it's going up again. the developing finance from China. And what has changed in these past years? So there's been a change in sectoral composition of development finance from China in the developing world, and this is again data from A-Data, their latest report on the BRI. And we see how banking and financial services have dramatically increased in the composition of development finance. And then we see a decrease in what characterized the BRI in the past year, so large infrastructures, energy sectors, mining, and so forth. And then I think providing a broader overview, so there is this idea of promoting small and beautiful projects, so less huge infrastructure project, signature project that characterized the past, the beginning of the BRI, a lot of also failed projects, but focusing more on ESG, greener, less financially risky than previous commitment. Here, unfortunately, this slide is completely useless because you cannot see the content of all the different regulations that China put in place to kind of greening the BRI. Since 2016, actually, there have been efforts, guidelines, and so forth to promote a greener kind of development of the initiative. And also, China created this debt sustainability framework in 2019 to reduce the sovereign debt risk for Chinese investors and distress for recipient countries. And also there's been discussion of possibility to introduce debt for nature swap that basically are portions of a developing nation's foreign debt that is forgiven in exchange for local investment in greening projects and environmental conservation measures. So very different from debt trap that we hear. See, at least China is trying to kind of clean up this image that it has about debt trap. And now I want to move to Europe because Europe, I think it's what is happening in Europe kind of reflect a key transformation in the development of the BRI from its start, from its inception to the present. And I want to show you these pictures. The composition of the participants in the Belt and Road Initiative Forum that I had the fortune to attend last October in Beijing. And so the BRI Forum basically gathered head of states that kind of support in different ways the BRI. And there's been so far 3 BRI forums, and the first one took place in 2017, and usually at the end of this forum you have a series of documents that emerge that usually are signed by all the participants or the majority of the participants. And we can see that there were a lot of EU representatives in this first forum, including Italian Prime Minister Paolo Gentiloni. In 2019 also there was actually even more representatives from the European countries that accounted for 1/3 of BRI Forum's top-led attendance. 11 out of 36 head of states were from Europe. There was not Germany, nor France or UK, but there were new attendees like Austria, Cyprus, and Portugal. And Belarus, Greece, Italy, Czech Republic, and Switzerland also were present. Last year, the situation was very, very different. Virtually, European leaders were absent. There was Hungarian Prime Minister Orban that has a very cozy relationship with China, and it's a bit of a kind of black sheep in Europe. It's considered a bit of a black sheep. There was Russian President Vladimir Putin, and also representatives from the Balkan countries, so from Eastern Europe. But then all the European leaders that used to be present from Belarus, Czech Republic, Greece, Italy, and Switzerland did not send anybody this time. And it was very visible. I mean, being there, it seemed to be in a different kind of world in terms of also visually going to this forum. And so where was Europe in China? So this is quite kind of surprising because Europe, at the origin of the BRI, was considered the endpoint of the initiative, both the maritime Silk Road and the belt, the economic belt going through Central Asia. And a record high investment of 35 billion was reached in 2016. And between 2005 and 2016, China invested nearly 164 billion in Europe compared to 103 billions in the US. So you can see the difference in terms of focus and importance of Europe. And a lot of this investment went to the Mediterranean region, Italy in particular, and Greece, although the largest kind of target were the big ones, so France, Germany, and the UK. But still, you see you see in this early years of the BRI a lot of focus on the Mediterranean countries. And then on the side of the European Union, there was also an interest in creating synergies with the BRI. And in March 2019, my country, Italy, was the first G7 country that joined the BRI officially, signing a memorandum of understanding that created a lot of troubles between Italy and the US and the other G7 member. We were scolded very badly for joining the BRI. But then things started to change, and we can see already in 2016 there was a peak of investment, and then there was a decline. And this year, this decline has been continuing. So the Chinese FDI in Europe reached a decade low of just 7.9 billion in 2022. That basically is comparable to the 2013 level. And one of the kind of main differences are the merger and acquisitions have decreased. And also here we see a map that was made by my colleague of kind of where China overseas investment goes, and the green regions are the one that received the most have received the most investment in 2022. And you see Central Asia, Africa, Latin America, Germany, and Eastern Europe, Mexico. So this already tells about like this shift that has been happening with regard to the BRI, this geopolitical shift. And why this shift in Europe? I mean, there are many different reasons for this transformation, but looking from the European perspective, from 2015, a lot of political figures and so forth, scholars started to have a much more critical view toward BRI and China investments in Europe, because there were a lot of concerns regarding China lack of reciprocity, and we saw also today with Yelin presentation, predatory investment practices, market restrictions in China, subsidies from Chinese government, and intellectual property issues. And one key case that kind of awakened Europe was in 2016 the acquisition of German robotic firm KUKA by China's Midea Group that raised concern of military-civil fusion. And here from 2016, when we saw the peak of Chinese investment, we see also the kind of increase of EU concern toward China presence in Europe. And then we had the introduction of a screening mechanism. There was a European comprehensive screening mechanism was introduced in 2017, and then individual countries started to introduce their own individual screening mechanisms. And then in 2019, the EU strategic outlook labeled China as an economic competitor and systemic rival. Then there was COVID that further kind of put suspicion on China's real intentions, despite its attempt to send masks and medical equipment. And I think one major transformation was in the European Union view of China was China's position in the Ukraine-Russia war, position and non-position, right? Because it's always a bit ambivalent, but you know, the unlimited friendship with Putin was very worrisome to Europe, also because the war is right there. And so that, I think, was also an awakening for Italy, and the new government basically exited the Belt and Road Initiative. But then on the side of China also, there's been transformation. So China adapted in some ways to this new perception of the Europeans, especially Western Europe. And infrastructure projects scaled down in Western Northern Europe, continuing in Central and Eastern European countries. But then we observe in the past years an openness of European Union to financial and monetary cooperation through currency swaps and clearing hubs. And so basically what is quite evident in these past years is how the BRI works at different speeds in Europe. So it continues, there's still engagement, but different in different regions and different sectors. And so there is persistent support in the east of Europe, and we can still see infrastructure projects that are continuing in Central and Eastern European countries, in particular in the Balkans, Serbia, Montenegro, and Croatia. There's bridges that have been built, and then in Montenegro there was this $1 billion highway, Bar-Bolghare highway, that showcased the newly opened Chinese-funded, the symbol of China deepening infrastructure influence in the Balkans. And then also Hungary, and we saw that Orbán attended the last BRI forum, and they announced also this BYD's electric vehicle manufacturing plant, the largest in Europe, in Hungary. So these infrastructure investments are still going on in some ways. Yeah. Okay. But then there is also a shift in sentiment in Central and Eastern European countries, with increasing skepticism toward the economic benefits of the BRI. The format of the 16+1, that at a certain point was 17+1, has been dismantled. And there is more skepticism. But overall, there is divergence between Eastern and Southern European enthusiasm, with increased reservation, and Western European increased conscience. But then we have, from a European perspective, an interesting trend of the past year is the openness to Chinese monetary ambition. Here we have a picture of the BRI, the digital Silk Road, so the digital presence, what fraction of projects of China investment in 5G cables and so forth. That goes hand in hand also with the internationalization of renminbi as well, because they promote the infrastructure development and monetary integration. And there is an interest across the Eurozone in promoting financial ties with China, also because Europe is a bit skeptical of the dollar dominance and support China kind of a vision for a multipolar currency system, where the euro also is an important currency. Yeah. And then the last thing that I want to say is also how the BRI has transformed us. So there are all these new initiatives that have been created by the European Union Global Gateway and the G7 Partnership for Global Infrastructure and Investment that are kind of a reaction to the BRI. So the BRI not only has transformed itself, but also has transformed us with all this initiative. And again, it's here to stay at different speed in different geographies. Thank you. Sorry for being late.
Thank you so much, Adele.
For political reasons, as we know, in the early 2010s, shortly after Xi Jinping came to power, but in a process that arguably began after the global financial crisis, before he came to power, China began to invest heavily across the developing world in some of the riskiest frontier markets. This was a process that was retroactively rebranded as Belt and Road, and many predicted at the time that it would push developing countries into debt traps. So I'm here to show you some charts that illustrate what has happened and why the United States and its Western partners, despite collaboration, have been unable to resolve this debt trap. The first thing to note, which I think is very important, is that the model of Belt and Road financing that most of us first think of, which is the Sri Lankan port of Hambantota, the massive construction project in the desert, is actually not what the Belt and Road has been about for almost a decade. This chart shows the number of BRI loans of $1 billion or more. And as you can see, it peaked in 2015, after which there was a realization in Beijing that this was an ineffective model, and Beijing started to look for smaller, more effective, and less risky projects. But what happened, I'm going to show you now, is that the results of that lending are still coming to pass as these projects come online and as the recipient countries find themselves unable to repay. So this is a chart of the share of China's loan portfolio that has gone to borrowers in distress. And you can see how it begins to tick up around 2015. Well, here is the numbers since. The combination of the COVID pandemic, the Russia-Ukraine war, inflation, and the rise of US interest rates has pushed much of the developing world into a situation of debt distress. Now, normally, China would continue to lend to infrastructure projects, or it would decide to pull that money back. But in the case of many of China's debtor countries, they require bridge financing in order to survive, in order to repay existing loans. And so this, I think, explains one of the charts that Adele showed before, where much of China's financing now appears to be going into financial sector instruments. Essentially, China is providing financing so that its debtor countries can continue to function, keeping them alive so they can repay existing loans. It is not, by and large, funding new infrastructure projects at all. Normally, this process, this sort of problem would have a simple resolution. The debtor states would get together with their creditors and they would negotiate on terms for a restructured debt package. It would include some combination of an extension of the repayment, so repayment of the same face value over a longer time, or it would result in a haircut where the creditors would accept actually getting repaid at only pennies on the dollar. But the problem is that China and the Western sovereign lenders have taken irreconcilable positions on this question. The Paris Club is essentially the list of the United States and the other mostly developed countries which have offered sovereign loans to the developing world. And as we can see in this chart, generally speaking, the Paris Club understands when a country is facing debt distress, you need to take a reduction on the face value of the debt. So to some extent, you can reschedule it, you can give them more time to repay, but they will not be capable of repaying unless you accept a haircut. Private bondholders have basically accepted this as well. The problem is that China still insists that it wants to be repaid in full. And moreover, China has the winning hand because it managed to insert terms into the contracts of many of these loans that are called no Paris Club clauses. In other words, China's debtor countries are not allowed to strike a deal with the Paris Club to renegotiate the terms of their Paris Club loans until they have already made a deal with China. China further takes the position that China's loans to these countries were commercial loans because China was engaged in a private business proposition with these countries, and China was not offering loans in the form of aid. Therefore, China says it should be paid back first, and it should even be paid back with a senior status to private bondholders. Now, whatever you think of this position on moral grounds, it's politically untenable in the West. The United States and its Western partners are not going to agree to bail out countries in debt distress so that China can be repaid in full for loans that most of us believe were issued under sort of spurious pretenses. It's not something that taxpayers would accept. And therefore, we're at an impasse. And even countries like Zambia, which defaulted almost 3 years ago, have found that even though the Paris Club and China in principle agreed on terms for a restructuring, in practice, China is vetoing resolutions between Zambia and its private creditors that will allow Zambia to get back on its feet. So why is China doing this? Why is China sticking to its guns on an issue? that is isolating it in the international community of nations, where it's essentially the only one of these major sovereign lenders that doesn't want to help get these developed countries back on their feet? Why is it taking a position that is putting countries like Zambia that have been previously very friendly to actually criticize its position in public? What is China playing at? Well, I think this chart reveals what China is playing at. China recognizes that it's not going to get paid back most of these dollars that it lent out over the first decade or so of the Belt and Road. But it's okay with that. It's okay with that because it would like to use the fact that much of the world is indebted to it as a means to internationalize its currency. So China can say to these countries, we know that you owe us all of these dollars. We're not going to let you off the hook, but you don't have to pay us back in dollars. You can pay us back in RMB instead. And what this chart shows is that over the past 5 years or so, much of the developing world's outstanding debt to China has been redenominated from dollar loans to RMB loans. This means that over time, these countries will need to acquire RMB. Their central banks will need to hold RMB as part of their foreign exchange reserves, and China will be able to build up more of a market for its currency offshore. So this is the unfortunate outcome of what was once called the debt trap. The result is very unfavorable for developing countries because it essentially means as long as the West and China cannot agree on the terms of a debt resolution, it will become very difficult to re-enter global capital markets. And many of these countries will be continually dependent on the IMF for one emergency financing package after another after another. If any of you have paid attention to the macro situation in Pakistan, that seems to be the likely fate of many countries in sub-Saharan Africa, in Central Asia, and in the Pacific Islands. This is a state of sort of perpetual dependence on IMF bridge financing in order to make essential interest payments to avoid default. In many cases, countries will be on the verge of current account crises too, because they lack the foreign exchange reserves. So they will need dollars from China or from somewhere else to continue to persist. So this is going to be something that will be an ongoing burden for the IMF and the Paris Club lenders. But China, meanwhile, can use these developing countries' dependence to internationalize its currency. And we can have a conversation in a minute about what that may be about. I would argue that it has to do in part with making China's financial system more resilient to the risk of sanctions in the event of a geopolitical contingency with the United States. But China is certainly not interested in letting these developing countries off the hook, and it is also aware that it is going to have to pay a substantial reputational price for doing so. So on that very somber note, I will conclude and hand it over to Minnie. Thank you very much.
But in any case, at least I should have a title here. But the title is really the emergence of Green Belt and Road Initiative from China to the world. And my name, you guys know, I've been associated with the CWP, the earliest among most of the cohorts, I think. And this, I really want to thank Ian Johnston, Tom, for organizing these annual conventions, annual reunions. Everyone here are my cherished circle of friends, and forever, intellectually and professionally and personally. And so I have worked on issues related to China on various different subjects, but I still struggle when people ask me, what do you do? What do you specialize? I don't have the answer. I mean, I worked on supply chains in electronics in Great Shanghai for my first book, and then Diasporas and FDI in China and India, the second book, and then the Belt and Road Initiative and beyond. but my specialty is not really none of those. Perhaps the beyond is my specialty rather than the Belt Road. They are the real Belt Road. And Zhang Hong, Dong in this audience, these are real BRI experts. My colleague Gwen Road. So I'm really, so I thought, what am I specialized in? It's actually China in the world. With a development and globalization perspective, and that's because when I started in exploring the field, CWP just was launched at Princeton 2004. Right, I finished all the coursework. I was like attending all the events, and I had my best friends Todd and Yan Chong. And then the early fellows, Xu Scott, and Yinan, and so they're just wonderful, wonderful cohorts. And then there's not only Yan and Tom, but all these like very distinguished guests coming to CWP events. They are very down to earth. I mean, elsewhere they might be this very proud figure. But in the CWP, I just feel like they are very approachable and very, very kind. But the second reason I feel like I specialize China in the world is really this field is never boring. Right? It's like so interesting. It's really so interesting. And China is itself is constantly changing. And its interaction with the world is like a kaleidoscope. Right? It's constantly shifting, like always shifting and then reconfiguring, right? So that's why like, I never get bored in China and the world field. So today, the emergence of green BRI really represents the latest stage of China's development and its interface with the world. So as I said, I only prepared three simple charts. So the first one, the theme is from China to the world. So this chart really shows using electrical vehicles as an example, right? And you can see that just a decade ago, the electrical vehicle in China was almost non-existent. It's starting, but compared to the global automaking giants, it's really nothing. And then after 2017, it started to take off. And most impressively, after 2020, right, the era of COVID, can you imagine, one of the largest industries grew out of nowhere from the era of COVID. And so by 2020, the China's EV production has basically more than the sum of all the automaking giants combined by very, very large margin. Okay, so this could be told, and a lot of people told this story as a success story. So I have a forthcoming article that looks at the drivers of this EV development in China. But we know, and I know for sure, that for every positive story in China, they tend to have a dark side, right? Some hidden dangers and lurking challenges. So I have the second chart to show you that EV development, the miracle was too miraculous. And there is something called too much of good things. Right? And so as China's EV production grew so rapidly, overcapacity was accumulating. And so this chart was about unsold electrical vehicles, cars, buses, vans, and trucks. I have another chart that shows the percentage. Right, the percentage would range from 50% to 90% of the cars annually that's left unsold in the stock. 1 year, okay, but for consistent 6-7 years, that's very significant overcapacity. Right? So what can China do? And so here I have a third chart. Sorry, where did I go? Okay, so this is how it shows that the BRI emerged as a very significant direction for China's green industrial globalization. So based on the China Investment Checkers data, and I compiled these investments in automobile sectors. So the top line, the blue line, indicates the outbound investments in automobile sectors. And in the earlier period, from 2013 to 2018, automobile investments rose very rapidly in China's outbound investment, but then it dropped quickly in 2018, very sharply. And yet the investments in green automobiles has been much, much more stable. So that's the orange line here. And more importantly, I was just so struck by looking at the chart. So from 2022 to 2023, and in the recent phase, the green automobile investments in the BRI countries. So if we narrowly define green BRI as a green investments from China in the BRI countries, then the automobile sector, it shows like most of the growth in the recent year came from BRI countries and investments. And so from 2022 to 2023, the latest year, perhaps 80% more of China's investments in green automobile industry actually occurred to the BRI countries. Right? So how did this happen? What were the drivers? Was it due to Beijing's top-down push? It's like President Xi Jinping waved the magic wand in Zhongnanhai, and then these things happen? Or is it due to Chinese industry's improvisation? Or it's due to the geopolitical restrictions from non-BRI countries, right? America, Europe, and other advanced democracies. So I have some preliminary results. I'm not going to share with you, but it suffices to say all and above. But they play in a different stages. So it's very interesting. So that's why I'm China in the world. It's really fascinating. So first is from documentary analysis. And you find that the Chinese national government, they do have a guideline, and they want to encourage the Chinese green industries to go global. But their documents indicate that they want the Chinese companies or firm, the industry, to create a kind of regional-based economic integration, like connections with Southeast Asia, Central Asia. It's very much regional focused. And then you find the reality. And the data that Adele also showed, that when the industries were encouraged to go to the region, they actually go global. And most of the exports and investments actually were in European countries. And that's their top destination. And then after 2022, I think the geopolitical cause started to take off. There's two things. One is Ukraine war. The other is really in the United States. I'm reader of foreign affairs, and they're just an influx of publications of the so-called geopolitics of clean technology or geopolitics of green energy. Right? So the U.S. policy, European policy also started to restrict the Chinese exports. So we see this sharp and concentrated redirection of investments, green investment and construction to the BRI countries. So I will stop here.
Thank you very much indeed for a fabulous paper. I mean, again, EVs and green auto is one of those subjects that everyone has to be aware of these days, but few, I think, have the control that you do over the data and the trends, and that's really important. I think we've had a wonderful panel so far, very rich empirically, but also with some really strong ideas that relate very significantly to the question of where China is going in the world and how the reinvented Belt and Road Initiative, or GDI, or whatever version we may next see, is going to be as part of that. If I may, I'm going to take chair's privilege, just at least for a minute or two, and put a quick question to follow up to each of our panelists, and then we'll open up, so please do get your hands and questions ready for that discussion in just a moment or two. But let me start with you, if I may, Adele. One of the statistics that most intrigued me in your chart showing where investment is going, well, first of all, the huge rise, I think 44% in terms of banking and financial services, but a drop of around 20% on energy projects. Now, one of the things that it seemed, at least at one moment, we were observing, let's say in the early 2010s, was, I mean, first of all, perhaps a redefinition of what the BRI is and the question of whether or not Chinese corporates, the private sector and so forth, could be counted as being more part of that push. But also particular areas of concentration where China seemed to feel that collectively it had some advantage, 5G, Huawei, ZTE and so forth, pharmaceuticals, life sciences, and of course post-pandemic, the question of how you could manufacture large amounts of vaccines, and energy, green energy transition. Is that statistic indicating that maybe the idea that China is going to be the green energy superpower of the next decade or two overhyped, or is there a different reason that number seems to have dropped so much?
Yeah. So we're actually working on a paper on China greening BRI, and like with data research, China research director, and the drop in energy project, I think, reflect this broader kind of decline of large investments. But we've seen a decline, for instance, in coal power plants. After Xi Jinping announced that we're going to stop the construction of coal power plants, so some of these projects that were ongoing were suspended. And we also see an increase in like in kind of more sustainable project, EV, etc., in the global world. But one of the issue that, so I'm leading out this Mapping Global China. So we try to have data on China. It's so hard to get kind of reliable data also on energy. I think data is very good. But there are also some limitations. But yeah, from what we can see, that China is trying to greening the BRI. And of course, there is all this official guidelines. So there is the intent from the state. And then given the complexity of China on the ground, right, that you have all the different actors, right, private companies that try to cut corners and so forth. So the action of China, what we think China, might be very multifaceted and not.
So just that's really fascinating. Just to be a little bit clear about that, we're all going to wait for the paper to come out because it sounds like it will be very, very important. Is that very sharp, seeming sharp 20% downturn an indication then that projects which are explicitly billed as being green energy projects are going down, but in fact they may still be out there in a different form, not that the actual amount of investment, interest and demand for these projects is going down? Because presumably there's still huge amounts of demand for energy.
Yeah, no, definitely. Especially in the global south, right, that there is a need to have access to reliable energy. It's, I think it's just transforming partly, and they're kind of shifting away from this large infrastructure that are problematic also for the environmental, for the environment. So even you build a dam and then you build it in an area that where there's high biodiversity, right, and you ruin. So it's very kind of complex. I was talking to another professor about Ghana. That China is even in mining, then it has effect on farming. So it's a very kind of complex ecosystem when you put an energy project as well. And so I think they're probably kind of be more cautious. And we'll see in the next 5 or 10 years what will be the effects of, yeah.
Okay, thanks very much. That's great. Well, perhaps the slogan from that should be 讲好一个好的中国故事，可是不要一个太明白的一个故事。Okay. Eyck, you have told us a very 明白故事. I wanted to follow up on one of the consequences that flows from your, fascinating proposition about what China's doing with its long-term debt strategies and means essentially of locking in an obligation to hold more renminbi. Now, one of the things it seems to me, and let's go back to Zambia for a moment, because actually that's a country with which China has had a pretty intense and lengthy relationship in the last 25, 30 years. One of the things that was notable in the 2010s was that China was not quick and not deft at understanding actually the quite lively nature of Zambian democracy. Admittedly, on one occasion, Michel Sato managed to win an election pushing back against China and then promptly went to Beijing, but that's politics as well. So the question I have for you is, isn't there a likelihood that in democratic African states, and even if democracies in Africa are sometimes flawed, there are a lot more voting opportunities than there certainly are in China, is that not going to create political parties and interest groups in many of those countries who will push forward very hard on the idea that actually China is deeply damaging to the interests of voters in those countries, and that it's a good idea to vote for parties that actually will do everything from rejecting the debt to basically telling China to go and get lost, or finding other means that will not only have reputational, but possibly actual, genuine fiscal and financial consequences for China in the short term? Or is that a Democrat's dream?
Well, thank you, Rana. It's a terrific question. I think there's two ways to answer it. The first is to think about what's in the interest of these countries at a strategic level, from the perspective of their national interests, and the other is to look at the domestic political level and understand what the incentives are for conflicting factions or parties inside that system. From the perspective of national interests, Zambia can't afford to antagonize China. Certainly, they are at risk if they break their financial obligations to China and then strike a deal with the Paris Club, because that will mean that there will be no more Chinese financing forthcoming. There will be no more Chinese FDI forthcoming. China may find ways to punish them by invoking terms within contracts long since signed that allow China to claim assets, land, other...
Wouldn't that have to be litigated by Zambian courts?
Other things that would be put up as collateral. Well, it would be a very significant and irrevocable decision for some of these countries to decide they're going to expropriate Chinese assets or engage in lawfare against China. So maybe that is something that some countries would be interested in doing, but it is not a cost-free proposition. China buys something on the order of 60% of the global copper supply. So if you're a copper producer and you intend not to sell to China, that is something of a decision to make. China is also influential in your neighborhood. There are Chinese-backed private security companies in your neighborhood. China may also paid off other actors within your country. So it is a bold move if you're Zambia or any other country in Zambia's position to tell China to go get lost. The stakes are potentially very high. What if you still don't get the IMF deal that you want, and you can't borrow from the private markets anymore? Then you're in deep trouble. You can't get the financing you need to keep your lights on in your government offices. So for that reason, most of these countries believe they need some sort of understanding with China. And what that means is they need some sort of understanding with both China and the Paris Club. And there are really, it's a three-body problem. There's three separately orbiting groups of creditors, each of whom wants a larger slice of a shrinking pie. There's China, there's the Paris Club, and there's the private bondholders. And in the long term, you're going to need financing from all three of them. So that is the reason why Zambia has been reluctant to criticize China in public. That's why Zambia's strategy has been to say to the Treasury, China's treating us so terribly, you have to help us out, you have to get us through this rough patch, we're on your side, wink wink, we just can't say it in public. Well, because they want to get through this difficult period. But once they're out of it, they're going to borrow from anyone who will lend to them at a most favorable rate. From the perspective of Zambian domestic politics, it's taking Zambia as a stand-in for any country in Zambia's position. Well, the incentives for whoever is in charge are to come to a deal with China if a deal with China can be arrived at. Because once the deal with China is arrived at, the capital can flow again. China can provide new bridge loans, and you can get the capital you need to generate the growth required and the jobs required to win your next election. So the incentives for anyone in charge is always to seek a possible deal with China. The incentives for the opposition are to say, you're selling the farm to China. Look how terrible and corrupt you are. We will negotiate better with China if we can get into power. And then as soon as they're in power, the logic changes and it's in their favor, it's in their interest to make a deal. That, I can't guarantee that that's the case in the case of Zambia today, having not been there. But in the case of Sri Lanka or Greece or Malaysia or any other country that's gone through ebbs and flows of negotiation and renegotiation in the history of the Belt and Road, this tends to be the pattern. Opposition politicians rail against the Belt and Road, and then as soon as they get into power, they cut the best deal they can that works for their domestic coalition. And that is the reason why you could say the Belt and Road hasn't died, that China continues to maintain basically quasi-functional relationships with a lot of these countries that fell into debt traps, because China is just big enough and significant enough as a trading partner that as long as China exists in the world, its partners will have to deal with it. And so anything that happened in the past is sort of water under the bridge.
Question of who built the bridge as well, but we'll get back to that, no doubt. Let us turn for a moment then to the auto industry. And Min, again, fascinating in terms of those charts and figures you showed us about how the auto industry is changing. So I want to just dig down again into the BRI aspect and the green BRI in a particular country, again, not Zambia in this case, but Malaysia. So it seems that Malaysia, which of course has, amongst other things, Proton, a major small vehicle manufacturer, moving towards obviously EV capability, that a lot of the FDI, a lot of the technology, a lot of the intellectual property is Chinese. The question I guess I have is, what is going to be the relationship, or what is going to be the separability of different brands and production streams of these autos in countries that are BRI linked, but obviously are not China themselves? In other words, is this basically just Chinese auto manufactured by a different name, or is there anything distinctive with the kind of national champions that countries like Malaysia are trying to promote using Chinese investment?
That's excellent question, and so not only Malaysia, Indonesia, Brazil. So we from the data we saw these projects, but how it's unfolded, I don't know. But I'll go to Malaysia, Indonesia in the summer. So invite me back next year. I would know more on this, whether it's a standalone or whether it's joint venture. I think joint venture is a very common theme, and also that's a technology transfer. That's also part of the investment. Indonesia does very smartly. So in the speed rail system, the whole supply chain of speed rail manufacturing was relocated to Indonesia. So I guess like Eyck is spot on. If you are a sizable BRI destination like Brazil, Indonesia, Malaysia, right? And you can negotiate with Chinese counterparts quite effectively, and so I think it probably will be a mixture of a partnership. But China is the largest EV market, so it kind of maxed out, like 35% last year. 35% of EVs sold in China, automobiles sold in China are EVs. So they got to go out. So it's if a countries have interest, acquiring some of the technology, and not only EV. So here I use EV because it's kind of to make the story clean. But wind, solar, carbon capture, so you have a long list of green BRI projects that the Chinese State Council guidelines indicate.
Okay, thanks very much. That's very clear. And we'll certainly have you back after your Southeast Asian trip. So I think there's plenty of, well, you see questions from the audience. Do we have? Yes, I think Dinderella is going to provide microphones. We'll start over there, but I see hands here as well, so we're plenty. Let's start over here. But I think everyone knows who everyone is in many cases, but not all the time. So please do tell us who you are and what your affiliation is.
Tyler Jost, Brown University. My question is for Eyck. So that presentation was terrific. I was following along for the first 3 quarters, but where I lost the train of logic was when you tried to argue that the primary reason that China was taking a kind of intransigent position with countries to which it had lent or supported projects was that the repayment would come in RMB. And I guess if you could just sort of walk me through why that is the case. And then if you could also think about, or I guess just like talk through what the alternative hypotheses would be for why we would also potentially observe that, and why like this is the right way to think about that particular problem. But
Thanks
great
very
presentation.
much, Tyler. That's great question. What I'll do is perhaps we'll just take a couple more and then we'll come back to various members of the panel and make sure we get some answers. But we will do that. And I think to stop you having to walk back and forth, let's sort of go across the room, as it were. Any hands from this side here? Or no? Oh yeah. Well, sorry, I haven't done that.
No,
that
that's
actually
okay.
is not helpful. But I do see hands over here as well. We'll get you slowly moving across the room.
Thank you.
Sorry, go ahead.
Andrew Chubb, CWP, primary affiliation, also Lancaster University and the Asia Society. Question for Adele. You mentioned the collapse of the 17+1, and I wonder, a couple of 3 years on now, what sort of readings do you have on the extent to which the system has absorbed that fate of its initiative, the relevant parts of the relevant bureaucracies? How are they interpreting what happened there? And is there a recognition of mistakes made? And do you see any sign that practices towards Europe or parts of Europe are likely to see some kind of reorientation in the future?
Andrew, thanks for that. Let's take one more from this side, and then poor Dinder will get to walk across while we get them answered. Perhaps you don't have to sprint. Anyone from this half of the room? Oh, yeah, sure. Why not Mark in that case? Sure. Sorry then.
Can you guys pass this down? I'll get that. We should do that. Here, Mark.
Thank you, Mark Wu, Fairbank Center. A question for any of the panelists concerning just the overall theme and the topic. One of the things that we've seen has been, despite the crackdown on Western technology exports to China, China's telecommunications exports, particularly to BRI countries, remains at an all-time high. And so I'm curious, to what extent is this just simply a coincidence versus this is part of China's IR strategy in order to knit together the networks and to have control over the networks outside of advanced economies?
Great. I saw Min already scribbling on that, so perhaps we'll keep the telecoms question for you in a minute, Min. But let's get the other questions to people first. Eyck, renminbi, do you want to just take us through the last part of the logic on holding on the foreign exchange holdings?
So the question is, as I described, China and the Paris Club are at an impasse. Each side says that the other is responsible for taking the haircut, and each side demands to be paid back in full, because neither wants to subsidize the other to get paid back in full. Thank you. And the U.S. or the Biden administration's position is that China can be sort of named and shamed into accepting a haircut on these loans. And so why do I believe that the strategy is to redenominate all of the loans in RMB? Well, first of all, the aid data numbers are pretty extraordinary, and they show how this didn't used to be a thing. China originally came to the Belt and Road. This is what Zoe Liu, another CWP alum, has shown so brilliantly in her book, The part of the story of the origin of the Belt and Road in the first place is that China had accumulated an excess supply of dollars through years of running gigantic current account surpluses. And these were sitting in cash in a piggy bank. And the State Administration on Foreign Exchange, together with the sovereign leverage funds, got together and said, well, why can't we put these dollars to work overseas and make a return? So the money that was lent out originally in the Belt and Road was all denominated in dollars. And as Michael Pettis pointed out, this was sort of a giant hedge against the possibility of currency depreciation in China. It was guaranteeing a future cash flow back to China in dollars. But over the last few years, a couple of things have happened. First of all, it's become clear that China is never going to see a lot of those dollars because several hundred billion of them went to projects that are now bad assets and can't pay for themselves. So that's hundreds of billions of dollars in assets that in theory are on the balance sheet of Chinese state banks, but they exist only on paper, and at some point they have to be written down. Meanwhile, the dollar reserves of the State Administration of Foreign Exchange, the dollars that they're still holding in cash that they haven't lent out, have declined by around 40%, at a time that China's GDP...
From what point to what point? 40% over?
Over the course of, since I think 2016 to today. So China has been reducing, they've been selling off their holdings of treasury bonds and diversifying their foreign exchange holdings into euros and yen and gold and other things. This is at a time when China's GDP has grown. So, in other words, relative to the share of China's GDP, the number of dollars that they're holding onto in their rainy day fund has shrunk significantly. And this might make sense if, at the same time, China's currency was being widely adopted around the world, but that's not really the case. I mean, the trend lines are positive, but broadly speaking, most central banks hold very little renminbi. Relatively little global trade is denominated in renminbi. They're a long way from having a comfortably internationalized currency. So you would think, considering all of the stuff that they buy, including oil and semiconductors and everything else, is denominated in dollars, that they would want to hold dollars. So the question is, why are they comfortable holding so much fewer dollars? And
could I, sorry, when you've done that, I could say, I think there's a two finger up there which is going to come back. Is it on this particular point?
Yes.
Okay, well, let Eyck finish first and then I'll bring you in on that. Yeah.
And I think the conclusion is, there was a decision made around 2018 that the process of RMB internationalization had to be accelerated because there was a risk that the US trade war, if you want to call it that, might escalate or broaden into the financial domain. And if the US ever put sanctions on China, it was vitally important that China have a functional external market of RMB, which meant lots of people using RMB outside China, and then functional payment systems, messaging and clearance systems to conduct RMB-denominated transactions in and out of China. In other words, so that if China somehow fell under US sanctions, on day one, China could basically continue to conduct international trade in RMB. And part of the way that has emerged to do this is to persuade the Europeans to sign up their banks to RMB clearance systems. And another way is to take these countries that are already in hock to China and say, well, we're going to let you redenominate your loans from dollars to RMB, and now this is going to force you to hold RMB and engage with RMB. So it is making the most of a bad situation by using this dependency to force partner states to hold RMB. I hope that answers the question.
Thanks, Eyck. I think there's literally a two-finger just to follow up on that at the back there. So if we get the mic to you, sir, then we'll do that. And then we'll take a couple of points from down here after the... Okay, well, we're going to still got answers from other two coming in as well, but we'll try and get as many points as we can.
Thanks. It's on. Yeah. Jed Schwartz, unaffiliated writer in Somerville. The question had to do with RMB is, last time I checked, flexibly pegged to the dollar. This continues to be the case, I believe. And the question is, why is it the case? And what has been the effect of the Belt and Road Initiative on the strength of the RMB? Has the Belt and Road Initiative change the situation, in which most of the countries in the third world and the fourth world, the very poor countries with very weak currencies, has the Belt and Road Initiative enabled them to sell their resources? Many of them have tremendous mineral resources at other than fire sale prices.
Okay, so thanks. That's a question, actually, and we'll put it in the list in that case, and we'll see if we get back to it there, but it's noted, and thanks for that. Let's get other answers in from our panel before that. Adele, 17+1 question that we have there. Go ahead.
Brussels has never been happy with the mechanism because it always seen it as a divide at the impera of Europe from the China side. And I think one of the reasons that led to the kind of dismantling and of this mechanism was the fact that a lot of the Central and Eastern European countries didn't see the benefit of signing memorandum of understanding and so forth, alienating Brussels. So there was from China more kind of smoke than substance very often. And then I think one key element was Russia, because a lot of the Central and Eastern European countries, they're concerned, especially with the Ukraine war, and they were very concerned about China and Russia unlimited friendship. And in terms of what the EU has learned, I don't know whether it has learned much, because if you see the Balkans now, if I were Europe, I would make them member. Or I will kind of speed up their membership, right? Because now they're in this limbo situation where they kind of see China and they're attracted by China, they receive investment by China, but then Europe cannot really, it's trying to invest, but I don't think it's doing much. And I think I will be more prone to inclusion, right? Make them feel more part of Europe and also of the decision making. Because also another issue with this 17+1 was that they felt marginal to Brussels, right? Because Brussels is led by the big ones, France, Germany. And so they felt we also want to have our share with China, and so that's why we create this mechanism. So I don't know how much the EU has learned from this.
Adele, thanks for that. Let's turn to telecoms, and you'll speak about that.
Yeah, well, thanks for this question. So I guess like a different person answer the question will give you a different answer. So I think there are two logical explanations. Right? One was hinted by perhaps Eyck and a lot of other strategic observers that China has this motivation to creating connectivity, digitally connectivity to the global south and bound them. And the other is an industry-led story. So I'm more on the industry story because I study Huawei, Telecom, Unicom, and then now the solar panel, the wind, the EV, and they all started trying to access these big advanced markets, India, Europe, North America, right? And they just couldn't break in. So, and then the government's assistance, the loans perhaps helped. And so the Middle East, Brazil, which was under this front line of competition, but Brazil opted for China, and Pakistan, those emerged as a viable destination for Chinese producers.
Thank you very much indeed. And we'll take another 3 points, I think, and then that probably, unfortunately, is going to have to be our panel if we're finishing at 3:05. They'll get very quick replies. But Hongzhang, you go first.
Yeah, thank you. I'm Hongzhang. I'm a postdoc here and also former CFT fellow. I wish we were on the same panel because we are really we're talking about the same thing, even though we do offer different interpretations. So I think for the benefit of audience, it will be useful to lay out some of our different interpretations of some of the facts that we are both talking about. So in terms of the disputes when it comes to debt renegotiation between China and many of the Belt and Road countries, and the role of the Paris Club, as well as the multilateral development in financial institutions. One key difference is that China doesn't want to take a haircut. Because China, one, is very inexperienced when it comes to debt restructuring. And by the way, Paris Club also took a decade to really learn how to restructure debts with African low-income countries. So China is skeptical of this solution that's been proposed mainly from the Paris Club and from the World Bank and IMF in terms of haircut and in terms of some other solutions. So China has been reluctant. So like I mentioned in my comments in the previous panel, China is not trying to, or at least my interpretation is that China is not trying to pressurize the debtor countries, but more due to the skepticism of the proposal coming from Paris Club. And also Paris Club currently is not very important creditors for many of these countries. China and actually private bondholders are the most important creditors. So it's a bit ingenuous for the private clubs to determine what the terms should be. And you mentioned that the RMB loans denominated things. I still wonder that doesn't quite solve the problem for China, even though that might be China's intention, like holding all these countries in hook. But for these countries to be able to repay their debts to China in RMB, they have to earn RMB in the first place, and that's not happening. So I think my alternative explanation would be a lot of it is just muddling through for any country like China, so inexperienced in dealing with these things. And so that's another question that's also proposed by previous
Really good, Hung Jung, to have that contrasting perspective. We'll give at the end, as we round up, we'll give Eyck a brief right of reply.
Sorry,
go ahead. Next.
My name is C.T. Tang. I'm a local resident. I just have a simple question. I want to bring gold reserve in the discussions. I understand. I saw some news that China increased its gold reserve and reduced U.S. cash. So, if you are the advisor to the Chinese government, what do you think in this area? Should China continue to increase its gold reserve to simplify the situation?
Thanks very much for the question. We are sticking to the BRI generally, so if an answer can be related to BRI, that'd be great. I think Lady Hare there had a question.
Not quite a BII question, but it's
if you could make it sort of somewhat a BRI question, because it is the topic, and we have plenty of time at coffee for more general discussion. But what's your BRI question, madam?
Well, along the same line as Hong just asked about Eyck about the RMB issue. Two quick things. One is that China insisted that all these loans need to be paid back by RMB and in full, but how come these countries under financial distress come up with the RMB to pay back? And second is that if China, you mentioned that China is incurring reputational costs for insisting this, and I assume it's with regarding to not just the Western countries, but also with the BRI countries. And so, so at this moment, China is trying to rally the global South to support China in various global issues. So why do you think that the internationalization of RMB is so important that it outweighs all the other interests in China, from China's perspective?
Great question. I think you could probably fit it. There was one just up the top as well. Is that right? Yeah. Let's get that in there as well.
So one comment.
Yeah, of course. No, absolutely. Everyone gets a quick comeback at the end, anyway.
Yeah, sure. Will Scatter, Georgetown University. Just a question about the role of digital currency, particularly the role of the e-RMB in China trying to internationalize that as a new venture of competing with the U.S. dollar. This is for Eyck. How do you kind of see Beijing using that and blending its efforts on the digital RMB with its broader efforts to, navigate its existing debt obligations with BRI countries?
Okay, thanks. So I think we've got a wonderful array of questions, and we've got a few. Yeah, I think that time we've got till 3:05 before we take our break. So I think it's enough time to give everyone a bit of time for some comeback. I'll start with Adele.
Actually, I have also a question for
oh wow! Sorry. Okay, the panel's now asking questions.
No, because I think it's an important, like the question of agency, right, of host country. Because you talk about China's doing this and that, but like what the recipient country can do, right? And I think there is this mutual relationship, right? So China gives money, but then where is the power of the recipient country? Maybe to default. I mean, I think there are some mutual ties in some ways.
Okay, did you want to make any other further comments?
No.
Okay, well that's great. In that case, why don't we take a comment from Min and then bring it back to you, because there's a lot wrapped up in the questions, Eyck, and we might give you the last word in that case. Min.
Well, okay, well I guess everyone is more interested in money. All the question
well, you need money to buy the EVs and the...
So I have a lot of comments about gold, etc. As I said, my main passion is like this perplexing China. But I do want to point out on the last digital RMB, I don't see the motivations of like expanding RMB internationalization through digital RMB. Rather, because most of the experiments actually were done locally, right? That was actually trying to how to increase the government digital currency to undercut the monopoly of private digital currency in China, the WeChat, the Alipay, and I think that it's slowly taking off, but I think it's a more domestic story than the global story.
Thanks very much for that insight, Min. That's great. So, Eyck, I think as you have heard, there are quite a lot of things that we want to bring in, and I'm going to have to ask you both to be, to give an answer, but to be fairly disciplined in your answer to bring us in on time. But we'll leave that last word to you, I think.
Okay, I'm going to try to synthesize all these questions into a short response, if I can. Why does China care about internationalizing the RMB? Well, part of it is prestige. Part of it is profit. If there is a deep global capital market, it makes it easier for Chinese institutions to raise capital overseas. It will increase global adoption of the RMB, which should over time make the RMB appreciate versus other currencies, which will increase the purchasing power of the Chinese people. There's various reasons to do it. But I would argue, and I argue this in a forthcoming paper, that the most urgent reason to internationalize the RMB is to sanctions-proof the Chinese economy. So that if, for whatever reason, in a geopolitical contingency, the United States imposed dollar sanctions, China would have sufficient support overseas that its trading partners would be willing to continue to transact with China, but not in US dollars, in China's currency. Now, the problem that China has faced is this catch-22 problem, which is that it does not have a liberalized capital account. You cannot freely convert money in and out of CNY. China has a dual currency system. It has two RMB, the CNY onshore and the CHY offshore. And what it wants to do is encourage a vibrant international market in CHY. And what it needs to do for that to be the case is to persuade the international investment community that the CHY will basically hold its value. So one thing that emerges in the Chinese literature is that efforts should be made to make it a reliable store of value. And that is the reason for a lot of, I believe, the stealth intervention that the PBOC does to maintain the exchange rate. You'll notice if you compare the USD exchange rate with the CNY to the USD exchange rate to other Asian currencies, China's currency is much less volatile. And I think that's part of an ongoing effort to build confidence in China's currency. The other thing you have to do is you have to build payment rails. You have to build the plumbing through which banks onshore and offshore can transact and complete RMB payments. And China has built that. It's called SIPS, and it's the equivalent of what we have in the West called SWIFT and CHIPS. And that is essentially a functional system, and the effort has been to get foreign banks to sign up. As that has happened, as China is more comfortable that in a crisis, its trading partners would successfully transition into transacting in RMB, China feels less pressure to hold on to dollars. Because if China is subject to US sanctions, it won't be able to use those dollars. Those dollars will be frozen, so it would rather have them in some other form of currency that it can use. So that explains why, if you accept this logic, it would make sense that China would be drawing down slowly its dollar reserves and putting them into other currencies. What is China's interest with respect to its partner countries, how does it think that these debtor countries like Zambia will acquire RMB? I think simple. It thinks Zambia will denominate its sales of copper or other commodities to China in RMB, so that in practice, it will be a commodities for debt relief trade. And these countries, which owe so much to China, will just be sending commodity shipments to China in exchange for a markdown of their RMB debts. And what leverage do China's partner countries have to resist that? Not much, because the alternative is paying back in dollars, and dollars are expensive. So I think it's a very smart strategy for China, and I think it's a very problematic strategy for the rest of us. As far as the digital RMB is concerned, I don't think this fundamentally changes the story. If you imagine a world in which you can't freely convert between onshore and offshore RMB, then it doesn't really matter if your offshore RMB are digital or non-digital. If you can't take them back on shore, they're not really worth very much. So what China needs to do is to create a large enough and deep enough capital market of offshore RMB that it won't be wiped out if the US imposes sanctions and everyone says, oh my goodness, I don't want to hold China's offshore currency. So this is part of the logic is the more people have skin in the game by holding China's currency, the less inclined the United States might be to make trouble for that market, and the more secure China's overall strategy will be.
Before we finish off, just to say we've had a fabulous panel. I think Adele, Eyck and Min have done sterling service. So could you thank them all in whatever currency you would like?